Well, hello everybody, and welcome to a Tuesday. Joe, it's the 14th of November. Joe with you here. So let's get into what the markets did today. I'm going to break down the news, which we did have a pretty good CPI number. I'm going to take a look at the technicals because we had a very good move after that. And as always, I'm going to share with you guys and the community our setups.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Well, unless you're underneath a rock, you saw the markets really just shoot up higher, so let's break down why. It's pretty obvious. These markets have been hanging on inflation for a long while now, pretty much since the beginning of summer. Going into the daily news, we got our first flattening CPI in about 15 months. I think it's been over a year since we've seen the now it's still up a little bit, but boy, it's showing that it's actually starting to flatten out. The markets absolutely love this. Everybody jumped back to September's high, and the Qs actually hit July highs. We're right back in business. We're talking about that Santa Claus rally. Rob was talking about one coming out of October. Corey was talking about a good surge off that bottom, and it looks like Maverick's been hitting it pretty well as of late. Not to toot our own horn, but toot toot. Let's get into how we finished today. 1.43% on the Dow. The SPY just shy of 2%. The Q's over 2%. The Russell had a good move at 5.5% off their bottom. The chart doesn't look very strong, but it had been punished over the shorter term back about a month and a half ago, so all a pretty good move. The biggest move we've seen was in all the sweetheart stocks. A good move back to the FANG stocks, back to the stay-at-home stocks. A lot of tech involvement in today's move. Oil didn't really go anywhere. It had been getting beat down quite a bit, getting into this number over the last couple of weeks. Still down in like the 70s a barrel there. And then gold, once again, 0.89% move up. And hey, when you've got no worries about inflation, when you get to inflation, then you don't expect interest rates to go up. And so you kind of see money come out of the dollar and back into gold, actually creating a really nice bounce that Corey talked about in detail in yesterday's market wrap up. Let's get to the advanced decline line all over the board. 84% up, 12% declining, and then 4% flat. The 12% declining is stuff that's just out of favor, a lot of the healthcare stuff, and some energy and materials. But, geez, I can't even say that. And almost everything kind of had a big bounce. 84% participated. 63% above the 50-day moving average, 37% on their way back up. But overall, just a nice, strong, massive, reactionary, bullish day. Let's jump into the chart, and you can see it's pretty obvious. Now, my expectations after seeing a move that we had off the bottom here, and I talked quite a bit about this over the last little bit, was resistance up at that 50-day moving average and rolling over and falling. And we did get that on Thursday of last week, but it was erased immediately on Friday. And what I do like about what Friday's candle left us with, and this is a good one, Rob made mention of this on the weekend class, is we did confirm a breakout above that resistance level. So we have above the 20, above the 50. It came really strong, fast, a big bounce. I was expecting a little bit more of a retracement, but we never did get confirmation. And what I do love about waiting on our technical analysis is we had our reversal signal, we had our confirmation candle, and then we need our follow-through. And what I refer to that as a secondary confirmation. So we have a reversal signal pattern, which is these two here, and it'd been nice to see another bear candle get below that, even at that 50-day moving average. And I would have been happy to get more bearish. We did not get that. In fact, we got quite the opposite. Well, what do we do now? Well, this is going to be very difficult because we are back up to, like I said earlier, these July highs, and it came hard and it came fast. So what do we do now? Well, I'll tell you what I can't do, and that's short. I can't be bearish. I've got some bearish positions that are they're not even worth executing because they're just so far out of the money. I'll just let those expire. Beautiful part about options and position sizing for max loss. Let those go. But I'm not going to throw out any more bearish tokens out here. That move is a sentiment changer. It's put it way too high, and for me to get super bearish, I'm just gonna you're just kind of hoping at that point. So we haven't established anything to where we can really trade. The thing that we need to focus on is the areas that we see it sitting in. And I'm just going to take a big old piece here, because in this box, what I love about it is you can see a support and resistance back in July. That's right, folks, you have to play this game. Back in July, that this could adhere itself to. So the top of this box I've drawn, or the bottom of the box, would be good support resistance levels. I would like to see a little bit of hesitation here, maybe consolidation or a pullback before I get too bullish. But I can tell you one thing I can't do is be bearish, right? Not a whole lot. Now let's jump over to our Qs, because the Qs went a little bit further back, and it doesn't look like I quite have the chart all the way back, but oh, actually I do. You can kind of back, you see it here. Let me pull my line out. These are July highs, right? So yeah, those are the July highs. Sorry, we're September highs and everything else. So here's the July high. You can see it corresponds with that. We're well above the September highs, and it's in the same situation. I want to see a pullback, a consolidation. We knew it was going to lead the way, and it did. But right now, the only thing I can do with any certainty is to par back my bearish research and look for something that might be emerging, something that's kind of outperforming or consolidating. Now, I do have a couple charts we can look at that do look pretty good, even considering that we had this huge move to the upside. That's right. Sometimes a big move can hurt us when it comes to follow through, make it and continuing with some trades. So overall, everything participated but energy, and this is a pretty good, hey, free and clear when it comes to growth and expansion. We're not worried about inflation or anything being curbed or anything hurting the consumer, and it goes out of the defensive plays, industrial energy, and into the growth stocks, back into Apple, Microsoft. All the sweethearts are moved higher. Amazon's actually on my list as well. So good charts moving higher. Confidence is back. Do we get a Santa Claus rally? Well, boy, we've sure started one, I'll tell you that. We'll see where we go from there. Now, where does that put me as far as my outlook goes? Definitely a +2 on the monthly outlook. It's above both moving averages. It's above two resistance areas, or at, I should say, the second one back here in September. So I've got to go +2, +1.5 at least. I'm at +1 because it's just out there. It's just this huge gap up. It's just sitting up there one day, hanging out. Do we come right back down and hit this support level? Let me draw it, since I got a little small chart here. We come back and touch this, or don't even come near it. Maybe we just stay right up in this area and just kind of meander sideways. So I'm going to say +1, not -1, because I don't expect a pullback. I can't expect a pullback after this little bit of a surge. Maybe we float a little higher, and that's kind of where we sit. So not much to go off of. I am going to change my scan when it comes to maybe favoring some of these emergers, maybe ascending triangles, or stocks that are in very similar situations to what we saw the Qs and the SPY and the diamonds in, where they came off of a pretty good bottom and now they're now breaking above resistance areas. So things that are changing trend, but be mindful of sectors, strengths and weaknesses. Rob did a great breakdown on the weekend if you guys want to review that class. What do I got? Obvious. Walmart. NRG actually was kind of one that's a little bit out there, but it's an emerger. It's strong. Amazon, Costco, you got a big list. I liked Allstate. We'll take a look at that one because it's in a bull pullback. And on the weak side, healthcare across the board. OHI is one I like, and it's actually not quite healthcare. It's a REIT, right? It's in the real estate area, but it's specific to health buildings. So let's take a look at the two just briefly. Here is the bull. I like the bull pullback on Allstate. I like how it came back down and it hit that exact place. You can see the back end of my box. Nice and uniform. Decreasing volume down here as it pulls back. I like to see all this. Not really rushing to cruise up anymore. I mean, as hard as what we saw the markets do today, but it could be the start of something. So I like that as something a little like a +1, maybe a +1.5 of vertical spread, guys. If you like those, could be a nice place to look. On the bear side, we'll just go straight over to it. The stocks that I do have are actually kind of on a low base. ABBV was one that I think Corey Rob brought up, or Corey did yesterday, and it still looks good. They're kind of on the low side. What I liked about this one is it did pull back. So it had a pretty cool little pullback off this bottom here, and we'll see how high it goes. You can see it's kind of correlating with this area back in here, so if it can just roll over. It's not there yet. This isn't a reversal signal by any means. I'd like to see it slow up, maybe stick around that 32, and roll back over if I want to do something bearish. Now, it might not, because if the motion of the ocean continues to be this bullish, a lot of these weak stocks they're not going to fall as hard as we'd like them to. So, like I say, it's very difficult to go actively bear hunting right now. Sentiment has moved to the bullish side rather abruptly, making it super difficult for technical analysis. When you gap up through an island, like, the only thing I can tell you is it's not bearish anymore. Now, it might fall apart and maybe it pulls back. A lot of people take profits, but it's not bearish. The reaction these markets had on the first inkling of not being an inflation number that's kind of subsiding was absolutely, it's a very glass half full move. It's abrupt, it's aggressive, it's up there, so you got to put on your bull hat, and you bears, you just got to wait. It's not coming down anytime soon. If it does, we'll get there. Look for support resistance to establish itself over the next few sessions. That little box I drew on the Qs, the resistance set in July or up in September for the others. Support areas, we got to just go all the way back and see if it can establish some sort of tradable pattern before we really get aggressive in putting money to work. The CPI having a major impact on today, but we do have PPI retail sales. We got manufacturing numbers, both the Empire State and the Philly Fed manufacturing, all due this week. Retail sales. So we got enough out there that might correlate with the CPI, or it might kind of go against it. I don't know. These numbers have been a little bit weird. But overall, guys, big surge, big bull move. Markets had already broken out from last week. That is bull, bull, and bull. As much as any bear wants to fight it, you just can't right now. So keep an eye on there and see if you can't take opportunities to the bull side. Check potential trades as always on earnings reports. I know there was a few out there, but I imagine these markets don't really care right now. They're just kind of putting money to work, and maybe we're going to work on that Santa Claus rally. As things change, folks, we'll keep you updated on them. And thank you for joining me, and we'll talk to you next time. Bye, guys.